Good evening to you. In the business segment of this edition of the Ballot Brief, analysts have expressed that sentiment around the upcoming elections, dubbed the most pivotal, is already turning the tide of the country's financial markets. It's been noted that money has been pouring into the country on bets that the governing ANC is set to win enough votes to avoid being forced into a coalition. An outcome of a coalition government is said to be less market-friendly, while some certainty comes with the expectation of improvements by the current leadership. As it stands, South African stocks are at 15-month highs, while the rand is one of the only 5 emerging market currencies to strengthen this year. Meanwhile, the business community is calling for stronger governance and financial controls post the 2024 elections. According to a Deloitte Africa Restructuring Survey, businesses on these aspects have become increasingly important in the context of the recent Stats SA data indicating an increase in company closures. That's as liquidations rose 34.6% in January. Industries impacted include financing, insurance, real estate, as well as hospitality. Turnaround and restructuring leader for Deloitte Africa, Mitchell-Marais, discusses this with us. A warm welcome to you, Joe. Increased activity in business rescue is predicted in South Africa this year. How can the election's outcome then change this forecast or basically capitalize on it?
Good evening, Tumisang, and good evening to your listeners. So I think, the challenge that we're facing in the restructuring profession and industry is that any uncertainty brings a challenge to businesses that are already on the brink. So the uncertainty that the election brings means that decisions are only likely to be made post the election. And for businesses that are struggling from a liquidity perspective, any delay in terms of financing decisions, transactions that are in the wings, can potentially have very, very negative consequences. So from an activity perspective, 64% of our respondents said that they believe there would be increased business rescue activity this year. We haven't seen it in the beginning of the year, and that is possibly an indication that it is expected post-election once everybody understands the landscape in which we are operating and what that means for businesses that are facing liquidity challenges.
Another factor that's noted here, Joe, is the Companies Act, and reform there is not factoring in 3 desired insolvency legislation changes. Do tell us about why this is, and could this also be linked to a matter of political will?
So yes, the Companies Act reform, it is very disappointing from the Chapter 6 perspective and business rescue. We are not seeing enough of the changes that have been put forward by professional bodies incorporated into the reform bill. And unfortunately, when we asked the survey respondents what they wanted to see as changes to Chapter 6, none of those are incorporated. Now, they ranged from, better protection of post-commencement finance, to a specialized insolvency court, to unified insolvency act. So one could argue, well, the place for those isn't necessarily within the reform bill. But certainly things like regulation, I think a fourth on our list was that there needs to be a higher bar to become a business rescue practitioner, because the perception of business rescue practitioner skills is certainly having an impact on the number of business rescues. That could have been something that was incorporated within the reform bill. So as to why that hasn't happened, I think there needs to be greater engagement between the regulators and professional bodies and government to make sure that the changes from those operating within the profession who want to see efficiency brought into the system are taken seriously.
That sounds like a holistic reform approach. And lastly, that survey expanding to 4 African countries, that including Kenya as well as Nigeria and Ghana. But business restructuring on the continent predicted to take an informal route with internal teams required. What is this set to look like, particularly in South Africa?
So it's important to understand what we mean by an informal route. It essentially means that restructuring activity is taking place around a boardroom table outside the framework of a legal process. So, for example, a business rescue or a liquidation. And one has to ask, why is that happening? And it has a lot to do with, is business rescue operating as it should? Do we have all of the requirements within Chapter 6. And to the extent we don't, it is easier to get a restructuring complete and over the line on an informal basis. And we see that as a trend throughout the continent. You are right. In Kenya and Nigeria and Ghana, the same finding holds true, that we expect to see more restructuring taking place outside of formal processes, that being in administration, for example, in Kenya, because you hit red tape. The efficiency in the system is just not there. And all of the challenges that we have with a process like business rescue are replicated in their various guises in the formal processes that are available in Ghana and Nigeria and Kenya as well.
Thank you so much for that insight. Joe Mitchell-Marais with Deloitte Africa talking to us about a survey that they conducted calling for reforms within the business structures of South Africa that are similar to the experiences across the African continent. And that is, of course, post the 2024 elections.